Good afternoon, everyone. Welcome to our webinar. Welcome if you're joining from Australia, New Zealand, or abroad. My name is Letitia. I'm from Teltonika in Australia. I'm the regional manager for the Asia Pacific, and I'll be presenting on this topic today. As our market has quite a lot to learn from Europe, we have a special guest joining us from Italy, who is one of the global leaders in this technology. Alex, thank you so much for coming. I'll let you introduce yourself.
Hello to everyone. Thank you. I've been working in Teltonika Telematics for 8 years, and all that time I was working with Italy market. So afterwards, I will share what we achieved there. Thank you all.
Thank you, Alex. We're also privileged to be joined in the chat by Wazik, who's our telematics and IoT engineer here in Australia, and he's also the head of technical support for the Asia Pacific. He'll be in the background to speak with you in the chat and help you with your technical questions should they come up in Q&A. And together, in the spirit of road safety, we'll explore how telematics technology is transforming motor insurance globally. By the end, I hope that you'll understand why embracing insurance is not just a tech upgrade, but a strategic imperative for safer roads and better business results. Let's start with a quick agenda. First, we'll set the stage with an overview of the insurance landscape in Australia and New Zealand, our market size, key players, and current trends. Next, we'll dive into the relevant pain points for motor insurers and fleet-based businesses. Then I'll introduce insurance telematics, explaining what telematics entails, how it works in vehicles, and how it addresses these pain points. I'll then hand over to Alex, who will give us an exclusive look at a real case from Italy, which has among the largest and most successful insurance telematics programs in the world. After that, we'll examine Teltonika's telematics hardware and how they specifically address insurers' needs. We'll then enumerate the benefits, mapping both the financial gains and intangible benefits of adopting insurance telematics. Finally, we'll open the floor to your questions. Whether they're market-based, product-based, or heavily technical, our team will be pleased to answer them. First, let's take a look at Australia's motor insurance landscape. Australia has a large and mature car insurance industries, with gross written premiums around $22.6 billion in 2024. Motor insurance is a significant segment, roughly a quarter of all insurance premiums. The market has been growing robustly. For instance, motor premiums rose around 12% in 2024, off the back of a resurgence in vehicle sales. Forecasts show a continued growth at around 6% annually, potentially reaching over $40 billion by 2034. The space is dominated by major insurers. Groups like IAG and Suncorp, parents of brands like Amy, GIO, lead the market alongside Allianz, QBE, UE, and others. It's a competitive arena where managing claims costs and underwriting profitability is increasingly challenging. This growth and competition puts pressure on insurers to innovate, and that's where telematics is starting to enter the conversation. Now on to New Zealand. New Zealand's motor insurance market is smaller, but it's still substantial, projected at around $2.65 billion in premiums by 2025. What's striking about New Zealand is that the market is concentrated by two primary insurers, IAG New Zealand and Suncorp New Zealand. These giants represent most of the market, and they need to work very hard to retain their market share. Recent reports show New Zealand market is seeing a slight softening of premium hikes after years of growth, yet insurers still grapple with challenges like claims inflation and extreme weather losses. In this environment, innovation is key. New Zealand's insurers are exploring usage-based insurance and telematics as well, albeit in very early stages. Given the similar pain points in New Zealand, rising claims costs, fraud cases, and the need to improve road safety, telematics solutions stand to offer significant value here too. Let's talk pain points for a moment. Insurers and fleet-based businesses, several pain points stand out in this conversation. Firstly, high claims frequency and costs are a constant pressure. a huge portion of premium income goes right back out in claims payments. Studies indicate up to 76% of motor premiums are spent on claims and related expenses, leaving a thin margin for insurance providers. Next, fraudulent and exaggerated claims are a serious concern. Industry experts estimate around 5 to 10% of insurance claims costs are due to fraud. In Australia alone, insurers covered around 560 million in motor and property claim fraud in 2023. Undetected fraud could be even higher. This fraud directly drives up premiums for honest customers, and what's alarming about this number is that Australia and New Zealand have among the lowest level of insurance fraud in the world, so that 560 million is just a mere speck on the global map. Another pain point is the time and cost of disputes and litigation. When claims are contested, and in businesses especially, they often are, they can end up in lengthy legal battles. An average disputed claim in one study had around 11,970 Australian dollars in legal overhead, not to mention the months of delay. And finally, there's the fundamental issue of poor driver behaviour. We know that around 94% of serious crashes are caused by driver error and poor choices on the road. For insurers and fleet operators, just a few bad drivers can cause disproportionate losses. So it, of course, makes a lot of sense to focus remedial efforts on improving driver behaviour at the core. High accident rates mean vehicle off the road for businesses, injury costs for employees, and higher future premiums for everyone. These pain points all undermine both profitability and public safety, and this is where telematics can really make a meaningful difference. Beyond the balance sheet, accidents themselves are a huge pain point, both human and financial. In Australia, for example, 1,260 people lost their lives in road crashes in 2023, and thousands more were injured. In New Zealand, they face similar per capita crash statistics. Of course, these aren't just numbers. Each serious accident is a tragedy and a cost. Beyond the human toll, the negative economic impact of road accidents is actually quite enormous. In Australia, road trauma is estimated to exceed $27 billion annually, roughly 1.8% of the nation's GDP. For New Zealand, road accidents cost the country $9.77 billion. That's around 4% of New Zealand's GDP. To put that into perspective, that's almost the entirety of what's being generated annually from the tourism and agriculture industries in these countries. It goes without saying that for businesses with vehicle fleets like logistics companies or rental car firms, accidents mean vehicle downtime. They mean repair bills, they mean lost productivity while vehicles are off the road. Some people here might remember this photo from the news a couple of years ago in Australia. This is an actual photo of an incident that occurred. 3 tourists in a rental car were trying to get to Stradbroke Island off of Brisbane. Their rental car was meant to be on that ferry in front of them, but unfortunately, instead, they followed their GPS navigation straight into the Brisbane River. As funny as it was, the cost of this mishap was actually potentially huge. Even a single low-speed, non-injury event like this can wipe out more than a decade of insurance premiums on an economy-class vehicle. But premiums aside, there's also a broader safety mandate for policymakers and insurers alike. Reducing accidents saves lives. It also lowers insurance costs in the long run for everyone. We don't always say it out loud, but insurance at its core is a business built to protect people's livelihoods. Addressing driver behaviour and accident rates as early as possible should be the main priority for everyone. Insurance telematics changes the conversation. It changes the conversation from calculating risk or to actively reducing it. It shifts the insurance industry's capacity from investigating claims and charging premiums to actively shaping driver behaviour for the better. With every harsh brake, every high-speed alert, and every dangerous swerve, insurers are able to not just monitor their drivers, but help to create better ones in the long run. How does it do this? Through live feed data from a telematics device installed into every insured vehicle. In today's world, data is king. For those who aren't familiar with telematics, in simple terms, telematics involves an in-vehicle device, typically a GPS tracker, with a sophisticated set of onboard motion sensors. This device continuously reports driving data. It includes the vehicle's location, its speed, and detailed driving behavior metrics like acceleration, braking intensity, and cornering g-forces. The device then transmits this data in real time to a central platform. Traditionally, these devices have been designed for and used by fleet providers like logistics companies and emergency services, so that they can monitor each trip's details and receive alerts centrally for events like collisions or even attempted theft within their fleets. But now, with this rich data becoming more accessible, insurers around the world have begun adopting the same technology to provide a better product and improve outcomes for their customers. It enables insurance companies to gather information on exactly how a customer drives, how often they drive, and even put a score and a price on their driving style. Plus, if there's an incident, the device facilitates a complete digital reconstruction of the event. What benefit does this provide? Firstly, and most importantly, it helps reduce accidents. When drivers know that their behavior is being monitored and scored, it encourages safer driving habits. Fleet studies across Europe have shown telematics programs yielding a 20 to 43% reduction in crash rates, and even sharper drops in harsh driving events. Fewer accidents obviously mean fewer claims. Insurers in markets like Italy and France have seen this play out. Telematics initiatives here contributed to an 18% drop in claims frequency. Plus, importantly, it meaningfully reduces bodily injury claims, especially among inexperienced and high-risk drivers. In the Cambridge Telematics study in the UK, a 5.5% drop in injury claims was recorded just in the initial 3 months. In the UK now, the frequency of serious injury-causing crashes among young drivers aged 17 to 25 has fallen nearly 35% and 16% for the general population. Secondly, telematics lowers claims costs and premiums by pricing risk more accurately. Safe drivers get discounted rates, attracting low-risk customers and incentivizing better driving across the board. For example, since introducing telematics for insurers, Italy has seen an average premiums fall a massive 25% across the board. It also has the hidden side effect of improving customer retention for insurers. It might seem counterintuitive to track people, but actually most people really appreciate the ability to be in control of their circumstances and the freedom to not pay for what they don't need. Another key benefit is the ability to prevent false and exaggerated claims. If a client declares, for example, that he was parked and another car crashed into him, by opening the crash report fed by the device, the insurer can then see that the car was in fact moving, it had harsh braking, and then experienced a collision. It removes the need for a he said, she said situation and the extensive cost and complexity that might come with it. And finally, telematics makes claims handling more efficient. Instant crash alerts and detailed logs enable adjusters to reconstruct accidents accurately, avoiding protracted investigations. This means faster settlements, fewer disputes escalating to litigation, and lower legal fees overall. In sum, telematics attacks the core issues. It promotes safer driving, reducing accidents, cuts down fraudulent and exaggerated claims, and streamlines legitimate claims. It's a win-win-win for insurers and customers alike. I'll now give the floor to our guest from Europe, who will share a success story from Italy. Alex, thank you so much for joining us.
Thank you, Letizia. And buongiorno from Italy. So, working with the Italian market for more than 8 years, our goal was to enter the insurance market. Why it was important? Well, the number speaks for themselves. Overall yearly UBI usage-based insurance connections in Italy has grown up to 2 million units a year, with a 10 million active usage-based insurance policies today. And what is the Teltonika part? Yearly, the UBI connections rate with Teltonika telematics devices, we achieved around 100,000 units. Well, what is the main pain point in Italy? it is fake claims and frauds. Basically, so it started from the damaged parts, swapping, taking them from the scrapyard and putting on the car. But nowadays, also the AI tools actually helping the people who want to make fakes to actually try and accomplish them, which leads to these statistics. In 2023, out of registered 2.5 million claims, 26% of them were exposed to the frauds. Well, and how to beat this? Actually, the main insurer in Italy created this robot. So the company called Generali, and they created this JADA robot, which tests the telematic devices to be sure that the collisions and accidents are being captured accurately. So not a surprise, our devices were tested within this robot, and we were able to detect not only the not calibrated crashes without the ignition, also we managed to get different types of crashes with the different scenarios, different thresholds that were applied on the settings. And all of the 11 events were detected in each test for each separate device. So the risky drivers are not only in Italy and not only in Naples. The risky drivers are everywhere. And using the telematics solution within the insurance, the situation was improved. Just in Naples, registering the claims dropped nearly 30%, so 28.9%, while in all the Italy, it has reached the 20% drop from overall crash rates among telematic-equipped drivers. What was the main point for this? Well, it's the advanced echo score, how it helps. So aside of the general information that we give from the telematic device, so all the driving behavior that is being sent to the platform encouraged the safer driving behavior. Score also adapts to the driving conditions. So for example, our partners, they adapt the information coming from the box together with the weather condition or the type of roads that the driver was driving. This creates the advanced echo score for the insurer. What is the offer? Well, of course, insurance company from the beginning, they use the generic instant discount for the first installation of the telematic box on the vehicle. Then they provide the information and the driving insights to the driver. Furthermore, they give discounts based on the scoring. So they want to keep those driving behavior in a good condition. And another point, they also allow to have discounts within the partner networks or even with the additional insurance product from the same insurer. How the success was achieved in Italy by Teltonika Telematics? Well, with the first partner, we started in the 2020 with the proof of concept, and there were 1,000 devices installed within the insurer. On the second year, we started the pilot installation and we reached 4,000 units installed. And then basically the first boom starts. So the first year in insurance for us was 2022, and we reached around 70,000 devices installed. And the next year followed with almost 100 pieces installed. Last year, we saw a small drop to 80,000 units. Nevertheless, this year we have a forecast to reach 150,000 units to be installed. So, as you can see, the insurance telematics brings important numbers to you. Thank you, and Letizia, I will pass the word back to you.
Thank you so much, Alex. The case in Italy is fascinating for sure and an inspiration for our market. Now, since we're a technology company first and foremost, let's take a look at the devices that enable all of this. Teltonica's FMC 880 is our purpose-built workhorse for insurance telematics. They clip straight onto a vehicle's battery for a very easy DIY installation and instant cover for an insurer. They're also low cost, meaning scale isn't an issue in new markets. Thanks to IP65 water resistance and a wide operating temperature range, they're perfectly suited to Australia and New Zealand's climates. With dual-band L1 and L5 GNSS, it delivers lane-level accuracy for sharp driver behaviour scoring, crash reconstruction capabilities, and fast stolen vehicle recovery. While an onboard accelerometer supplies real-time crash, tow-away, and tamper alerts that can feed directly into claims triage and fraud analytics. Overall, this device gives a scalable, data-rich telematics backbone without inflating costs for an insurer. Building on that plug-and-play foundation, Teltonica's FTC 880 series takes self-install tracking a step further. Still battery-mounted for ease, but now sealed in an IP69K enclosure that can withstand direct high-pressure washdowns. Integrated natively with the F&B platform, it inherits all the analytics and API hooks insurers already use globally, while a convenient onboard battery keeps data flows consistent in the event of a power loss to the vehicle. The result is a tougher, fully autonomous tracker that maintains the same low-touch economics, yet it stays online in environments where other devices might fail. And finally, when the use case calls for it and it moves beyond clip and go to require hardwire ins and outs, the next rung in Teltonica's ladder is the FTC 921, a 4G LTE successor to the FMB 920 for those familiar with our range. It's built on our latest platform. This device has 5 wiring pins. It has a digital in, digital out, analog in, plus power and ground. So insurers can layer in an immobilizer control, panic button triggers, for example, or even fuel level data. While its broad input range from 10 to 19 volts lets the same device span across passenger cars, heavy trucks, and even electric machinery. Summing up, our robust 4G trackers offer features including accelerometer tracking, in-depth driver behavior analysis, accurate crash tracing, and accurate virtual odometer readings. Of all of these features, arguably, the ability to digitally reconstruct accidents is among the most useful. To show how this works, let's look at a real example from one of our clients in Europe. Here you can see a fairly standard multi-car accident involving 3 cars. This is a graphic of the recorded XYZ axis. From this axis data, we can evaluate the correct side and force of impact. As you can see there were 3 crashes, from the back, from the front, and then again from the back. Here, the crash trace timeline lists every critical data point chronologically, and the accompanying graph pinpoints the exact moment of impact. You can see the precise time and location of the collision, while another view shows the speed against time, so analysts can reconstruct the events. If you need to know afterwards what the driver was doing beforehand, you can also then pull up the pre-crash behavior just as easily as you've pulled this. This simple visualization of accelerometer data illustrates how insurers can build their own dashboards to investigate accidents, determine liability, and review driving habits in minutes. Taking it a step further, full crash reconstruction allows us to determine on which particular second the first impact occurred and where it was geared. This information will be especially helpful in ambiguous situations with no obvious culprit of the accident or in complicated accidents with several vehicles, like the one we've just described. All in all, our devices, when deployed at scale, give insurers a complete view of every vehicle in their care and the drivers behind them. Finally, let's talk about the bottom line. How does telematics translate to financial returns for insurers? The most direct impact is on the loss ratio, the percentage of premiums paid out in claims. We saw earlier that locally in Australia, Claims account for 76% of all claimed premiums. By cutting down accidents and optimizing pricing, telematics improves this ratio dramatically. In fact, insurers with telematics programs have experienced significant drops in claims frequency. Earlier, we noted 18% fewer claims in France and Italy in telematics user groups. So, fewer claims paid means a healthy loss ratio and thus far better profitability. Next, fraud reduction is pure savings for insurers. Remember that fraud can account for up to 10% of claims costs in Australia. If telematics data helps deny illegitimate claims, that's money that would have been otherwise wrongly paid out. For a large insurer, preventing even a handful of fraudulent claims, like staged accidents, can save hundreds of thousands of dollars each, adding directly to the bottom line. Additionally, claims handling efficiency is a direct cost impact. Automating processes like first notice of loss and using telematics for crash analysis can lower administrative overhead significantly. By resolving claims faster and more accurately, insurers simply spend less. One UK insurer noted that telematics data allowed them to settle certain complex claims in just 2 days instead of the previous 4 weeks that it took. By streamlining claims through automation and accurate crash data from telematics, an average insurer in Australia and New Zealand could save nearly $850,000 annually per 100,000 policies, just on internal admin. Combined, these are direct to bottom line savings, meaning insurers can reduce risk, reward good drivers, and still come out ahead financially, and quite significantly so. Another angle to look at this is that it gives you better customer segmentation. Telematics products tend to attract safer drivers who opt in for discounts. In other words, a lower risk customer pool. Over time, this self-selection can improve an insurer's overall book of business risk profile. High-risk drivers might avoid telematics policies since their poor driving would be exposed, meaning they either exit to competitors or they pay higher rates in line with their risk. In summary, telematics can boost ROI through lower claims costs, lower operating costs, and improved premium revenue alignment with actual risk. It turns insurance into more of an exact science, and the financial gains can be quite substantial. Here is just a quick and clear visual breakdown of how telematics-based risk segmentation boosts insurer profitability over time. Even if you pass on a 30% discount to all of your safe drivers, you're still going to be significantly better off than you would be without a telematics program, and the bulk of that is coming from your safe driver pool. This is also great because it lends itself to fairer policy structures. You no longer have to blanketly smack all young drivers, for example, with higher premiums, or have biased gender-based pricing models. Risk calculations can become completely fair. Insurers may also attract new customers with competitive, lower pricing models by offering pay-as-you-drive structures like they have in Europe. Because you now have access to exactly how much your customer is driving, their policy premiums can reflect this directly. For example, a customer driving 50,000 kilometers per year would pay significantly lower than a customer driving 20,000 kilometers per year, and so on. But of course, as we've seen, telematics benefits aren't purely financial. There's also important intangible and strategic advantages as well. It's National Road Safety Week here in Australia at the moment, so the most important benefit is safety first and foremost for us. By reducing crashes and injuries, telematics programs factually save lives on the road. This aligns with broader societal initiatives like Australia's Vision Zero 2050. That's the goal of zero road fatalities by the year 2050. By rolling out insurance telematics at scale across Australia, this technology is something that could actually meaningfully help realize this goal. And just finally, a quick note before we close on the policy and regulatory angle. Broadly, policymakers and regulators are very supportive of telematics because it aligns with public interest goals. In Italy, for example, all data from the nation's insurance telematics is collected and reported to their national regulators database. This means it's able to be used for nationwide fraud risk identification and prevention, and a lot of that process is now automated. The data collected from telemetry devices can also have important civic uses. For example, city planners and traffic authorities might use aggregated telematics data to then identify dangerous intersections or to design better road infrastructure into the future. Looking ahead, we might even see more moves towards standardizing telematics. Some countries have already discussed mandating black box recorders in all new cars, which would then dovetail with insurance uses. In conclusion, why do you need insurance telematics? Because it's a powerful, proven solution to the very problems that plague our industry. We've seen from experiences in Europe, the UK, and other markets that telematics works. It reduces accidents and claims, it saves money, and it even opens up new pricing models that customers appreciate. With partners like us at Teltonika, you have access to mature European telematics technology that can be rolled out at scale right now. There is a lot of groundwork to cover on this topic, and we hope that Australia and New Zealand insurers are able to learn from the successes around the world and use that to leapfrog forward. All in all, the future of motor insurance is connected, data-driven, and customer-centric. Telematics embodies all three. So as we wrap up, I encourage you to view telematics not as an IT project, but as a strategic imperative for staying ahead in a changing insurance landscape. Now is really the time to embrace insurance telematics to reduce risk, reduce costs, and ultimately save lives on our roads. It was a pleasure to present this topic to you today. Thank you so much. Take care and goodbye for now.